Hey everyone, and welcome to the Deep Dive. We're going to take a deep dive into some pretty big news that could really impact GameStop.
Oh, yeah.
The New York Stock Exchange is thinking about going to 22-hour trading.
Wow.
And we all know that the GameStop community on Reddit has some thoughts about that.
You know it?
So we've got some spicy threads from both r/GME and r/Superstock.
Yeah, those are going to be fun.
So we're going to unpack all that good stuff. We've got the official announcement from the NYSE.
Right.
And then we'll jump into those Reddit threads and see how people are reacting.
All right.
Are you ready to get started?
Let's do it.
Okay, so first up the news, straight from the source, the NYSE, which is part of the Intercontinental Exchange, they just put out a press release saying they're considering extending trading hours on the NYSE Arca Equities Exchange to a whopping 22 hours a day.
Wow, that's a big change.
Right.
The market is open right now for about 6.5 hours each weekday.
Yeah.
This would mean trading could happen from 1:30 a.m. to 11:30 p.m. Eastern Time.
So practically around the clock.
Yeah, pretty much.
And it's not just for GameStop. This would apply to all U.S.-listed stocks and ETFs.
Right, pending regulatory approval, of course.
Of course.
Still just a proposal.
Right.
If it goes through, though,
Yes.
it'll be really interesting to see how it plays out.
Oh, for sure. Okay, so let's talk about what this could mean for the average investor,
Okay.
especially, those following GameStop. On one hand, more trading hours could mean more flexibility, right?
Absolutely.
You could potentially buy or sell stock whenever it's convenient for you,
Yeah,
regardless of your time zone.
exactly. And for a global company like GameStop,
Right,
that increased accessibility could be beneficial.
for sure. But, there are also potential downsides to consider, right?
Oh, yeah, of course. Increased trading hours could lead to more volatility in the market.
So, meaning prices could swing up and down more dramatically.
Exactly. And that could be challenging for individual investors who might not have the time or resources to constantly monitor the market.
Right. You're not going to be sitting there all day watching it.
Yeah, exactly. And there's also the question of whether this change would give an even bigger advantage to large institutional investors. Yeah.
Mm-hmm.
Who already have those sophisticated trading systems and access to real-time data.
Right. It almost feels like they already have a leg up. So this would just increase that.
Yeah.
Yeah, it definitely raises some questions about fairness and whether this would level the playing field
Yeah.
or tilt it even further in the other direction.
Right.
Okay, now let's see what the Reddit folks are saying.
Let's hear it.
Okay, first up, we have a thread from r/GME. As you know, this is a community completely dedicated to GameStop discussion.
Yeah.
It's a great place to get a pulse on what retail investors are thinking.
Yeah. It's known for being a very passionate community
For sure.
with very strong opinions about the company and its future.
Right. So not surprisingly, the reactions to this 22-hour trading news are pretty mixed.
I can imagine.
Some folks are worried this is just another way for hedge funds to manipulate the market, giving them more time to execute their strategies.
Right.
There's one comment that says, NYSE works for HFs and big trading companies against the public.
Yeah, there's definitely a lot of distrust toward Wall Street institutions within these communities.
Absolutely.
Yeah.
But there are also some more, level-headed perspectives in the thread.
Oh, okay.
Some people think that this move by the NYSE is simply about generating more revenue for themselves through increased trading activity.
Yeah, that makes sense.
Right. One comment puts it bluntly, I think 22-hour trading is just a way to generate more income for NYSE, nothing more.
It's a fair point. The NYSE is a business, after all.
Exactly.
More trading means more fees for them.
Right.
So it's important to consider those financial incentives at play.
For sure.
But the concerns about market manipulation aren't unfounded either.
Right.
Longer trading hours could make it more difficult for individual investors to keep up and react to sudden changes in the market.
Right. So you almost have to weigh those two things against each other. Right. It's a complex issue with valid points on both sides.
Absolutely.
Now, let's move on to r/Superstock,
Okay.
which is known for its, deep dives into GameStop. And, well, let's just say they have some very interesting theories.
Oh, yeah. r/Superstock. They're not afraid to go down the rabbit hole.
Exactly. And this next thread we're looking at is a prime example of that.
Okay.
It's all about GameStop's recent share offerings, which some people are calling dilution.
Right.
But this thread presents a different perspective, that these offerings are actually beneficial for the company and potentially even for investors in the long run.
Intriguing. Let's break that down.
Okay, so their argument hinges on the concept of phantom shares and short selling.
Okay.
They believe that there are more GameStop shares out there than there should be,
Mm-hmm.
these phantom shares, because of illegal naked short selling.
Yeah, for those who might not be familiar,
Right.
naked short selling is when someone sells shares of stock that they don't actually own and they haven't even borrowed them yet.
Yeah. It's basically like selling something that you don't have.
Yeah. It's a risky practice that can artificially inflate the number of shares in circulation.
Right. And r/Superstock believes that GameStop is strategically using these share offerings to convert those phantom shares into real ones.
Oh, so they're essentially reclaiming control and raising capital at the same time.
Exactly.
That's a very interesting theory. It does seem counterintuitive that issuing more shares could actually benefit the company
Right.
and potentially even boost the stock price in the long run.
It's definitely a bold strategy.
Yeah.
But even within r/Superstock,
Mm-hmm.
there are some differing opinions. Some people are totally on board with this theory, believing it's a genius move by GameStop to outsmart those betting against the company.
Right.
But others are worried about how these share offerings might affect something called the Moass.
Ah, the Moass, the mother of all short squeezes, that mythical event that many GameStop investors are hoping for.
Exactly. The idea is that if enough short sellers are forced to cover their positions all at once,
Yeah.
it would drive the stock price through the roof.
Right.
But some members of r/Superstock are concerned that these share offerings could potentially reduce the magnitude of that squeeze if it were to happen.
So it's a potential trade-off then
Right.
between strengthening the company now by raising capital
Yeah.
versus potentially maximizing gains later if a short squeeze were to occur.
It's a question of short-term versus long-term strategy.
Yeah, makes sense. All right, so let's shift gears now and talk about the man himself, Ryan Cohen,
Oh, yes. GameStop's chairman.
the one and only. We found a thread that's all about his recent social media activity, and let's just say the community is reading into every single pixel.
Oh, they are.
Yeah.
So get this. He recently switched his profile picture from a wrinkled brain to a smooth brain,
Oh, wow.
tweeted YOLO, and changed his Twitter banner to different variations of the American flag.
And of course, the speculation is running wild.
Oh, absolutely. People are trying to decode every little detail,
Yeah.
looking for hidden messages and clues about GameStop's future. They're talking about bull flag patterns on the stock chart, potential connections to the upcoming U.S. election, you name it.
It's like a real-life treasure hunt.
It really is.
Yeah.
And it highlights just how closely this community follows every move that Ryan Cohen makes.
It's fascinating how a seemingly simple profile picture change can spark so much discussion and analysis.
Right. It's almost like everyone's trying to crack the Da Vinci Code of the stock market.
Yeah, I love it.
But seriously, what do you think? How much of this is just wishful thinking, and how much could actually be significant?
Well, it's important to remember that Ryan Cohen is a businessman first and foremost. His primary goal is to make GameStop a successful company.
Right.
So while his social media posts might be entertaining, it's unlikely that he's using them to reveal top-secret information about the company's strategy.
Okay, so maybe not a secret code,
Yeah.
but it's still interesting to see how the community interprets his actions, right?
Absolutely.
Mm.
Especially considering how influential he is within the GameStop community. His actions, intentional or not, can definitely impact investor sentiment.
Right. Okay, so we've got Ryan Cohen's cryptic clues,
Mm-hmm.
we've got the potential MOAS, and we've got the NYSE potentially shaking things up with 22-hour trading.
Yeah,
It's a lot to keep track of.
it is. But r/Superstonk isn't done yet. They're also looking at potential market catalysts and specific dates that have caught their attention.
Dates. Okay, this is where things get really interesting. Let's hear it.
Well, this next thread we found is all about T+35, which refers to settlement dates for trades.
T+35. So like a countdown clock for something big?
In a way, yes. It's the time it takes for a trade to be fully settled and for shares to be delivered.
Okay.
And the thread is highlighting several dates that have the community buzzing. Specifically, they're looking at October 28th through the 30th with extra emphasis on October 29th.
October 29th. Why that date specifically?
Well, it just so happens to be National Cat Day in the U.S.
Of course it is.
Wow.
Which has led to speculation about a potential connection to Deep Fucking Value,
Uh-huh.
the legendary GameStop investor who's known for his cat-themed online persona.
Right. And it doesn't stop there. The thread also mentions November 5th and 6th, which is right around U.S. election week.
Okay, so we've got T+35 cycles, National Cat Day, and the U.S. election.
Right.
What kind of clues are they piecing together from all of this?
Now, some members of the community are exploring some more speculative theories, and it gets pretty interesting. They're pointing to a large call option buy that was routed through the XBOX exchange,
Interesting.
seeing it as a potential signal because of the connection between XBOX and GameStop.
Right. The secret message encoded in a trade.
Hmm.
What else?
They're also drawing parallels to historical market events like the 1929 crash and the Volkswagen short squeeze, both of which occurred around this time of year. They're really looking for any patterns or connections that might hint at what's to come.
Wow, they're going all in on the historical parallels. What do you make of all this? Should we be marking our calendars for October 29th?
While it's fun to entertain these theories, it's crucial to maintain a healthy dose of skepticism. Settlement dates are important, yes, but reading too much into coincidences can be misleading.
Right. It's easy to get caught up in the hype, especially when you're part of a community that's so passionate and dedicated.
Exactly. But it's also important to remember that the market is a complex system with many factors at play. Attributing too much significance to specific dates or events can lead to disappointment if things don't play out as expected.
Solid advice.
Mm-hmm.
So we've covered a lot of ground here. We've got the NYSE
Right.
potentially shaking things up with 22-hour trading, sparking debates about manipulation versus profit motives.
Right.
We've explored the fascinating theory from r/superstock about how GameStop might be using dilution to its advantage,
Uh-huh.
raising capital while potentially impacting a hypothetical MOAS.
Yeah.
And let's not forget Ryan Cohen,
Right.
the enigmatic chairman dropping cryptic clues that send the community into a frenzy of interpretation.
It's great.
And those T+35 countdowns, cat-themed holidays, and historical parallels that have some folks convinced something big is brewing.
Yeah,
It's a wild ride, to say the least.
absolutely. So after hearing all of this, what are your main takeaways?
You know what stands out to me is the incredible level of engagement and analysis coming from these online communities.
Yeah.
They're not just passively consuming information.
Yeah.
They're actively researching, sharing their findings, and challenging conventional wisdom.
They're really doing their due diligence.
Yeah, it's inspiring to see that level of passion and dedication.
Absolutely. But it also highlights the importance of critical thinking and being able to distinguish between speculation and concrete evidence.
Right, because as we've seen, there's no shortage of speculation in this world, especially when it comes to GameStop.
Very true. But that's part of what makes this so compelling. It's a reminder that the market is not just about numbers and charts, but also about psychology narratives and the collective actions of individuals.
Okay, so a lot to ponder. After hearing all of this, how do you feel about the potential impact of 22-hour trading on GameStop? And what do you think Ryan Cohen is really up to with all those cryptic posts? Is he just having fun, or is there a master plan unfolding?
It really is. They're so passionate and committed.
They're like financial detectives, always on the lookout for clues.
Yeah.
But let's step back for a second and talk about the NYSE's proposal for 22-hour trading.
Okay.
We touched on it earlier, but it's worth exploring the potential implications a bit more.
Absolutely. It's a significant change. It could really reshape the landscape of the stock market.
Right,
One of the biggest concerns, as we mentioned before, is the potential for increased volatility.
right.
With the market open for practically 24 hours a day, prices could fluctuate more wildly and rapidly, making it more challenging for investors to navigate.
Right. And I imagine that could be especially tough for individual investors who aren't glued to their screens all day and night.
Yeah.
You know, they could easily miss out on opportunities.
Yeah.
Or even worse, get caught on the wrong side of a sudden price swing.
Exactly. It could create a situation where only the most sophisticated traders with access to real-time data and advanced algorithms can truly capitalize on the extended trading hours. That raises concerns about fairness and whether this change would widen the gap between institutional investors and everyday people trying to invest.
Yeah, it's like a high-stakes game of speed chess, and not everyone has the same processing power.
Right.
It's also interesting to think about the impact this could have on liquidity.
Mm.
Liquidity refers to how easily you can buy or sell a stock without significantly affecting its price.
Right. More trading hours could potentially lead to more liquidity, especially during times when the market would normally be closed. That could be a good thing for investors who want to be able to trade quickly and efficiently.
But could there be a downside to that
Right.
increased liquidity?
Potentially, it could also make the market more susceptible to sudden shifts in sentiment and algorithmic trading strategies that can exacerbate price swings.
There's a delicate balance.
Yeah.
Increased liquidity could be beneficial, but it could also amplify the risks associated with volatility.
Exactly.
This brings us to another important aspect, information asymmetry.
Right. Information asymmetry refers to the situation where One party in a transaction has more or better information than the other. It's already a concern in the stock market, and extended trading hours could potentially make it worse.
Okay. How so?
Well, imagine a scenario where some important news about GameStop breaks overnight. Institutional investors with access to real-time news feeds and sophisticated analysis tools would be able to react instantly, potentially buying or selling large blocks of shares before most individual investors even wake up.
Oh, so they could have a significant advantage in terms of being able to capitalize on new information or react to changing market conditions.
Exactly. And that could create an even more uneven playing field where individual investors are constantly playing catch up.
It's fascinating to think about all the ripple effects this one change could have,
Yeah.
from increased volatility and concerns about fairness to the potential impact on liquidity and information asymmetry.
Yeah.
There's a lot to consider. But let's shift gears now and talk a little bit more about those phantom shares
Huh.
and the theory that GameStop might be using share offerings to convert them into real ones.
Right.
It's a pretty complex concept, and I think it would be helpful to unpack it a bit further for our listeners who might not be familiar with the intricacies of short selling.
You're right. It can get pretty confusing quickly.
Yeah.
So let's start with the basics. Short selling is essentially the opposite of buying a stock. When you buy a stock, you're betting that the price will go up. When you short sell a stock, you're betting that the price will go down.
Okay. That makes sense.
Yeah.
But how does that actually work in practice?
Well, let's say you believe that GameStop's stock price is going to decline.
Okay.
You could borrow shares of GameStop from someone who owns them, usually through a brokerage, and then sell those borrowed shares on the open market.
So you're selling something that you don't actually own.
Exactly.
Yeah.
You're essentially borrowing the shares with the promise to return them later. The idea is that if the price of GameStop does indeed go down, you can buy those shares back at a lower price later on, return them to the lender, and pocket the difference as profit.
Okay, I'm starting to get it. But what does this have to do with phantom shares?
That's where things get a bit more complicated. Phantom shares, in this context, refer to shares that have been sold short but haven't actually been located or borrowed yet. It's a practice called naked short selling.
Naked short selling. That sounds risky.
It is. It's essentially selling something that doesn't even exist yet. It's illegal in many cases because it can artificially inflate the number of shares in circulation, potentially manipulating the market.
So how does this all tie back to GameStop's share offerings?
Well, the theory put forward by some members of the r/superstock community is that GameStop has been heavily targeted by naked short sellers, leading to a situation where there are more shares of GameStop supposedly out there than there should be.
And they believe that GameStop is strategically using these share offerings to force those naked short sellers to actually locate and deliver the shares they've sold.
Exactly. It's like they're saying, okay, you say you've sold all these shares, well, show us the goods.
Interesting. So by issuing more shares, GameStop is essentially putting pressure on those who have been betting against the company, potentially forcing them to cover their positions and driving up the price.
That's the idea. It's a bold and somewhat controversial strategy. Not everyone agrees that it's actually happening or that it would be effective in the long run, but it's a fascinating theory that has gained a lot of traction within the GameStop community.
It definitely makes you think about the power dynamics at play in the market.
Yeah.
You've got these large institutional investors who are often betting against companies like GameStop, and then you've got this passionate community of retail investors who are fighting back, trying to level the playing field.
It's a classic David versus Goliath story, and it's unfolding right before our eyes. But as with any complex situation, there are multiple perspectives and interpretations. It's important to consider all sides of the story and to be critical of the information we encounter, even when it comes from sources we trust.
Well said. And speaking of sources we trust, or at least sources that provide endless entertainment, let's circle back to Ryan Cohen and his knack for sparking frenzy with his cryptic social media posts.
Okay.
We touched on his recent profile picture change and the YOLO tweet,
Right.
but there's one more detail that has the community buzzing his Twitter banner.
Ah, yes, the ever-changing American flag.
Exactly. He's been cycling through different variations of the American flag, and naturally, people are trying to figure out what it all means. Some are pointing to the fact that one of the flags resembles a bull flag pattern, which is a technical indicator used in charting to predict potential price movements.
Right. A bull flag pattern on a stock chart typically suggests that the price is likely to continue rising after a brief period of consolidation.
So some folks are interpreting Cohen's banner as a subtle hint that he believes GameStop stock is headed for another rally.
It's possible. But as we discussed earlier, it's important to be cautious about reading too much into these kinds of signals. Ryan Cohen is a savvy businessman, and he's certainly aware of the attention his social media activity
All
generates.
right, he might just be having some fun with the community, knowing that they'll analyze every little detail,
Yeah.
or maybe he's intentionally trying to stir the pot and generate hype.
It's hard to say for sure, but one thing's for certain, Ryan Cohen is a master of keeping people guessing. And that's part of what makes him such a compelling figure in the GameStop saga.
Okay, so we've got Ryan Cohen's cryptic clues,
Mm-hmm.
potential market manipulation by hedge funds,
Great.
and the NYSE's proposal for 22-hour trading, which could potentially shake things up even further.
Yeah,
It's a lot to digest.
it is. And it all highlights the complex interplay between traditional financial markets, the rise of retail investors, and the power of social media in shaping narratives and driving market sentiment.
Absolutely. But before we wrap up, let's revisit those intriguing dates that have some members of the r/Superstonk community on high alert. We talked about October 29th, National Cat Day, and the potential connection to deep fucking value.
Yeah.
But there are a couple of other dates mentioned as well, right?
Right, November 5th and 6th, which coincide with the U.S. election. Now, the theories surrounding these dates get pretty speculative, so it's important to take them with a grain of salt.
Of course.
Yeah.
But it's still fun to explore the possibilities, right?
Absolutely. So some members of the community are speculating that major market events potentially related to GameStop could occur around these dates. They're drawing parallels to historical market crashes and short squeezes that have happened in the past, particularly around election time.
Intriguing. Do they have any specific evidence to support these theories?
Well, they're pointing to things like unusual options activity, large block trades being routed through specific exchanges and cryptic messages that they believe are being hidden in plain sight. They're piecing together a puzzle, but whether it's a puzzle with a real solution remains to be seen.
It's like they're trying to decipher a financial prophecy. So what do you think? Should we be bracing ourselves for some major market fireworks around these dates?
Honestly, it's impossible to say for sure. The market is notoriously unpredictable. And while these theories are intriguing, it's important to remember that they're just that, theories.
Right. It's easy to get swept up in the excitement and speculation, but it's always a good idea to keep a level head and not make any rash investment decisions based on unverified information.
Exactly. Prudent investing is about balancing risk and reward, doing your research, and making informed decisions based on solid evidence. While it's tempting to chase those get-rich-quick schemes, a long-term perspective and a focus on fundamentals are usually the keys to success in the stock market.
Solid advice. So what should our listener take away from all this?
I hope they come away with a deeper appreciation for the complexity and dynamism of the stock market. It's not just about numbers and charts. It's about human psychology narratives and the interplay of forces both rational and irrational.
And maybe a renewed sense of wonder at the dedication and passion of these online communities who are so deeply invested in the GameStop saga.
Absolutely. They're a force to be reckoned with, and their impact on the market is undeniable.
Yeah, it really is wild. And who knows what's going to happen next?
Right. It's a story that's still being written.
Absolutely.
And no one knows for sure what the next chapter will hold. But I think we've given our listener plenty to think about today.
Oh, yeah.
So before we sign off, I want to leave you with this thought. What if, instead of trying to predict the future, we focus on understanding the present?
Yeah.
What if we try to see the GameStop saga not just as a financial drama, but as a reflection of the changing dynamics of the market, the power of online communities, and the evolving relationship between companies and their investors?
That's a great point. Instead of getting caught up in all the hype and speculation, let's try to zoom out and see the bigger picture.
Yeah.
What can we learn from this? How are these events shaping the future of investing? And what role do we as individuals want to play in this evolving landscape? Yeah, those are some really big questions, and I don't think there are any easy answers.
Right.
But I encourage our listener to keep exploring, keep asking questions, and most importantly, keep engaging with these topics in a thoughtful and critical way.
Absolutely. The more we learn, the better equipped we'll be to navigate the complexities of the market and make informed decisions that align with our own values and goals.
Well said.
Yeah.
And on that note, we'll wrap up this deep dive into the world of GameStop.
It's been great.
It has been a pleasure exploring this fascinating topic with you.
Likewise.
And to our listener, thank you for joining us on this journey. Stay curious, stay informed, and as always, stay tuned for more deep dives into the most captivating stories out there. Until next time,